Hello and a very warm welcome to another episode of DB Insights, which is a series where we talk to and hear from our economists across Deutsche Bank Research. I'm Hans Wolf of Deutsche Bank's Comms and CSR team, and here with me today is our very own Chief German economist, Robin Winkler. Thank you for joining me.
Hans Wolf.
Hello. Thank you. Robin, there's been a lot of talk recently about Germany's economy being the laggard in terms of growth, not the locomotive which everybody was hoping to see. That sounds catchy, but what are the numbers saying behind all this?
It's a pretty sobering picture, unfortunately. Germany's stagnating more or less, and the rest of the Eurozone is growing slowly, but it's growing, and some of the other European countries are growing pretty fast. If you look at Spain, it's growing at 3%. That's very similar to the US. So there's a bit of a gap in the Eurozone. What explains it? Ultimately, across Europe, industry is performing pretty badly. Services are doing much better. And as you know, the German economy is very skewed towards industry. Spain, for example, is very skewed to services and tourism. In particular, that's booming, so that explains the gap.
I think there's been a lot of hope, though, and you guys talked about it all along. The German consumer will come to our rescue, but we know the proof of the pudding is in the eating, as one says. Has consumption lived up to these expectations?
Not yet. That's been disappointing. What is happening is disposable incomes are growing again. Germans are taking home relatively big pay rises. Inflation is falling, so in real terms, wages are going up. And we expected that to translate into more consumption, but so far that's not happening. Why that is, very difficult to explain. I think ultimately when you look at the surveys, Germans just seem pretty skeptical that these income gains will continue into the future. They're pretty uncertain about what's going to happen in the next 6 to 12 months. And I think that's why they're still holding back on consumption for now.
What should happen now, ideally, in an ideal world, for the economy to get back on track, literally, and to gain momentum, as it were?
If you look at trade, that's been going pretty well, thanks to the US in particular. Exports to the US have been pretty strong, but the US economy now is slowing down. There's some risks of trade wars potentially on the horizon. At the same time, China is not doing particularly well. So trade is not going to get us out of this funk. If you look at investment, construction in particular, that's been in a bad place as well. What's needed for that to really kick off again is lower interest rates. That's happening already, it's in the pipeline, but it's going to take some time. It also probably takes more animal spirits, and at this point it's very difficult to say where these better, fresher animal spirits will come from. So consumption is really the best hope.
Thanks a lot, Robin. Robin Winkler, our very own Chief German economist of Deutsche Bank Research. We'll be back soon with another DB Insights. Thank you.